I'm Alan Kenny, and we're at the Hay Adams Hotel in Washington, D.C. for NAREIT's 2017 Washington Leadership Forum. I'm joined by Bruce Schanzer, President and CEO of Cedar Realty Trust. So Bruce, I know that one of Cedar's main priorities recently has been shuffling the portfolio a little bit to get the right property mix. Can you give us an update as to where things stand with that?
Sure. So again, good to see you, and I appreciate your question. We've been focused at Cedar on the Northeast since before I was at Cedar, and since I've been at Cedar, we've been focusing on migrating our capital by selling assets in lower density markets between Washington, D.C. and Boston, and focusing on investing that capital into shopping centers in the highest density submarkets in the D.C. to Boston corridor. This is going to be a process that's going to be ongoing, but we've made huge strides. Most recently, last week, we closed on an asset in Wilmington, Delaware that was right in the downtown area of Wilmington. And so again, it's an ongoing process, but we feel good about it. What we feel particularly good about, though, is that the assets that we have been acquiring have significant redevelopment potential, and over the next 12 months, we're poised to commence at least one of those very significant redevelopments, and we would expect over the near term to be commencing additional projects, redevelopment projects that is, in those assets that we've acquired up and down the East Coast.
And you mentioned that Washington, D.C. to Boston, Acela corridor. That's known as a really competitive environment for retail. Has that changed at all during your tenure?
It is a very competitive market, and it continues to be a competitive market. At Cedar, we have a significant advantage over the competition because of our long operating history in these markets, and we really are local sharpshooters. So our investment team, for example, knows just about every single center, every single owner in these markets, and that gives us a strategic advantage. Just about everything we acquire is off-market, where we are contacted when a situation arises where the owner of a shopping center is interested in selling, and oftentimes we're the only person who that owner is speaking with because of our track record of closing, of not retrading, and of being knowledgeable investors.
And finally, when you're meeting with investors and analysts right now, what are some of the big questions that you're getting from them?
So there are, broadly speaking, two areas of concern for investors. One is the interest rate environment and how that will translate into real estate values. But the one that's much more relevant as a retail landlord is, of course, the impact of e-commerce on retail real estate. And one of the things that we have focused on at Cedar in our investment strategy of migrating our capital from lower dense to higher density urban markets is the idea of creating a more defensive portfolio. So among the benefits of being in these higher density markets is that in addition to having retail components in our real estate, much of our real estate either already does or through this redevelopment process will have more of a mixed use component with residential or other uses. And so we think that by much in the same way that retailers are becoming more omni-channel, are selling goods in both bricks and mortar and online formats, we think that the idea of going beyond retail and having other real estate uses in our assets is going to make sense as we look forward into a relatively choppy retailing environment.
Well, Bruce, thank you so much for your time.
Thanks, Alan.
For more on this and other REIT news and analysis, be sure to visit REIT.com.